Okay, welcome guys to today's teachings. Okay, um so excited to have you all in today's lecture. Okay, so we are still on the topic of internal range liquidity and market structure shifts. Okay, so we are still on that series. Okay, this is series number 2. Obviously it's going to be up to 3 series, and we'll be done with this topic of internal range liquidity and market structure shift. Okay, so let's get down to business. Okay, now I decided to take a look at silver against the US dollar. Okay, this is silver against the US dollar, and we're going to look at today price action. Okay, actually, or rather, is it yesterday? I think it's yesterday, being Thursday, if I'm not mistaken. Okay, so I was unable to get an entry today because I had two pairs actually looking at. I was actually looking at the silver against the dollar and the Aussie dollar. Okay, so I couldn't actually get an entry on the silver dollar today, the silver against the dollar today, but I definitely traded Aussie dollar, which I'm going to make a video on, a breakdown video on it as well. Okay, as you all know, we always start our analysis from the weekly time frame. Okay, and work our way down to the 1 minute time frame. So this is the weekly time frame on silver against the US dollar. Okay, so what I want you to do right now is to pause the video and add your own annotations to the chart that is before you right now. Okay, so you might want to pull up a chart and go to the weekly time frame and add your own markups and the rest. Okay, before you continue the video. In that way we get to be on the same page. Okay, in that way we get to be on the same page. Okay, so quickly before we get into the video, I would like to say a few things. Actually thinking of a way to make things easier for us. Okay, so in that way what I'm going to do is that once we get to 200 subscribers on this channel, I'm going to create a Telegram group. Okay, I'm going to create a Telegram group for us. In that way I'm going to be sharing my charts, and everyone else can as well share their own thoughts, their own view of the market every week and every single trading day. Okay, so that way we can come together more closely and share our ideas, which is the main purpose for this channel. Okay, so the main purpose of this channel is to share ideas and knowledge on what I have learned so far on institutional trading from ICT. Okay, so that's just the main purpose of this channel. So once we hit 200 subscribers, I'm going to create that channel, a Telegram channel, so that every one of us can be in touch easily. Okay, that way we can communicate more often and keep the family together. Okay, so with that said, let us dive in deeper to today's tutorial. Okay, now this is the weekly time frame, and I have added some few annotations here. Okay, as you can see, the weekly time frame is currently bullish. Okay, currently bullish. Price broke structure, and we are currently retracing, and you can see the retracement bounced off the equilibrium level, 0.50% level on the fib. Okay, so we bounced off. The market was bought up at equilibrium price, not too cheap, not too expensive. Okay, so it was a very good price. Okay, so silver was bought up from this level right here. Okay, so now going down further to the daily time frame, This is that weekly break of structure, okay, and we have as you can see, we have a swing low down here which have set side liquidity resting below it, okay. Now this is that weekly equilibrium of the total range for the weekly range, okay. This is that equilibrium that price bounced up from, okay. So we actually, this is on Friday's price action, okay. I was unable to get an entry for this day, but we are going to look at on Thursday transactions, okay. We're going to look at on Thursday's trading day, okay. So as you can see, price was bullish from this level going up, so we know that our directional bias is bullish, and therefore we are going into the marketplace looking for buy entries only, okay. But breaking this daily time frame chart further, okay, breaking it further, what else can you see? What else do you see on this daily time frame? What else can you see from the charts? From this price action data, what else can you see? So I want you to pause the video and try and make your own annotations, okay. Try and get your own annotations before continuing the video. Yeah, so let's get down, let's go down further. Okay, now this is the daily time frame. We are still in the daily time frame. This is that weekly break of structure, and this is that swing low I talked about, okay. So measuring the daily range from this low to this high, we have the equilibrium here, right here, okay. Now price dropped down, and what is below the equilibrium? This is fair value gap right here, okay. This is a fair value gap right here, and as you can see, the bodies of the candles respected the fair value gap and they stayed on top of the fair value gap, okay. Now this is that weekly equilibrium level we bounced off from, okay. Now looking at this trading range from this low to this high, what else can you see? This, take a close look here. What is resting below these old lows? Okay, price was created a kind of short-term support level here, so they are probably sell stops resting below this old low, which is also referred to as internal range liquidity, okay. So from this range low to this range high, we have internal range liquidity resting below here, and as you can see, price punched through, taking out the sell side liquidity that was resting below this old low and probably trading into this old fair value gap, filling it up. So we are expecting price to rally up from this point, okay, which is what is currently doing. So right now price, I want to see silver in the new trading way. Probably silver might reach up for this old high and this old high, okay, because as we can see on the daily time frame, it is currently expanding upwards, okay. So, okay, it's currently expanding upwards. Alright, so let's get down deeper. Now this is the 1 hour time frame, okay, and this is on this is the on Thursday price action, okay. This is on Thursday price action. This is on Thursday price action, if I'm not mistaken. Okay, now this is the 1 hour time frame. We already know that we use the 1 hour time frame for delineation, okay. So we use it to delineate the opening 12 o'clock midnight, okay, and this is the following days 12 o'clock midnight. So this is a 24-hour time window. It's a 24-hour time window, okay. So now this is the opening candle, and remember we are currently bullish. Our traditional bias is bullish, okay. So now this is the New York London sessions opening, which is 2 o'clock a.m. New York time to 5 o'clock a.m. New York time, okay. So we have our time of the day delineated on the 1 hour time frame. So let's go down to our intraday chart time frame, which is the 15-minute time frame, okay. So going down to our 15-minute time frame, you can see this is the opening candle, okay. Now remember, if we are expecting higher prices, we should anticipate some level of stop. Now remember, if we're anticipating higher prices, we should expect some level of stop run on sell side liquidity. Okay, so I was waiting for which so I was expecting some kind of run on sell side liquidity, and this little arrow here is the London opening 2 o'clock. Okay, the line was kind of covering the candles wick. That's why I decided to use the tiny arrow delineating it. Okay, so this is the 2 o'clock a.m. New York time for London section opening. Okay, so now we have this swing low right here. Taking that out in time, price did what? You can see price taking out this traded through it. Okay, taking out the sell side liquidity, resting below this old low. Okay, so what do? We go down to our lower time frame. Okay, probably the next time frame I went down to was 3-minute time frame. Okay, so now this is that run on the sell side liquidity. So I was waiting for a break or a shift in market structure, which is what we got here. Okay, so this was my shift in market structure, and this was my fair value gap. Then I got an entry right here, and my stop loss was below here. Okay, so now as you can see, price traded downwards and stopped me out. Okay, so I got my first entry for the day was in losses. Okay, so I got stopped out right here, so I took a loss on this first trade. Okay, so now but my directional bias is still bullish and I'm still looking for higher prices. Okay, so now this, take a look at this. Okay, this is an old low as well. Okay, so now price traded below this old low. This now became my new stop run on sell side liquidity. Okay, so I took this level out and I draw it out in time. Okay, on that 3-minute time frame. Then price traded through traded through this low on this 3-minute time frame. Okay, and I went down to the 1-minute time frame on that same old low that just got me stopped out. This was where my stop loss was residing, and I got stopped out right here. Okay, so after being stopped out, I went down to the 1-minute time frame. Okay, and I was looking for shift in market structure. So all I have in mind was that if I can get another shift in market structure and probably another new entry, if I got stopped out as well, that means I'm done for the day. I'm no longer going to look for any further entries. Okay, so so I was still sticking with my directional bias, which is obviously bullish. Okay, so now price take stopped me out the first time, and I was okay. I was kind of now looking for a new entry right here, so a new break of structure, a new market shift in market structure. Okay, so price traded up, retraced, started expanding. There was no break of structure until this very candle. Okay, until this candle traded above this old short-term high. So this was my shift in market structure. So going back to this trending range, you can see this is, what is this resting here? This is a fair value gap. Okay, so this is where I got my new entry, and my stop loss was right below here, as you can see here. Okay, so now for my profit target, I targeted the opening candle, because using the power of 3, if we are expecting a bullish day, which is obviously what we are expecting, the movement should be accumulation, manipulation and distribution. So I know with just that little concept, I was really expecting the price. I was expecting price to trade above the opening candle in order for it to be bullish. Okay, so price trading below the opening of the candle price trading below the opening of the candle was currently bearish, okay, was making the market look bearish, okay. So I know when I went long here, I was really expecting the price to trade above the opening candle. So that was one of my, so I set my target above the opening of the candle, above an old high above the opening of the candle, okay. So as you can see right here, this was my kind of partials. I was looking at this, I was looking at price to trade to this level, and as well to this old high above the opening candle, okay. So that was where I took everything off, okay. So I got in right here, and I exited the market, above the opening candle, which is above this old high, which is above the opening candle. So this was where I got out. So I got out right here. So now you can see this trade that I took, the second trade, gave me back, covered my losses, and I was still very much in profit, okay. I was still very much in profit. I did not record this, I did not capture the trade. I would have shared a video with us, because my emotions was all over the place due to this loss that I took here, okay. So but that is just trading for you. If the business of trading involves losses, okay, and every trader out there must incur losses one way or the other, okay. So now my emotions were all over the place, and I was like, okay, if I get in a second entry, probably maybe I got stopped at again, I will probably be done with this market for the day. I'm not going to trade again, and to avoid emotional trading and kind of hurting my account. So I got my second entry here, and I was still sticking with the bias, which was still very bullish, and as you can see, I got a very nice price action data. So now this chart, was where I got my entry. Someone left a comment that he doesn't know how I draw my fair value gap, okay. So this is how I draw it, okay. Now this is where I got that breakup structure. My fair value gap is simply the three candle. A fair value gap is simply a three candle pattern, okay. So we have this candle high, we have a single candle pass through, and we have another candle slow. So how I draw my fair value gap is I simply take the third candle, okay, the third candle slow, I draw it out in time, and I take the first candle's high, and I draw it at a time. So my entry is always when price trade below this third candle slow for bullish entry, okay. So if I'm expecting bullishness, and once price trades, so this was where I actually got tapped in on this candle. When it traded below the low of this candle, this was where I got tapped in, and all this was kind of draw down for me, okay. So this is where I normally place my entry, below the low of the third candle, and my stop loss below the swing low or below. Sometimes I use the third candle, but most of the time I use the swing low, okay. So that is that for this lesson. So with this we